Talk 650.
Talk 650.
Powered by CBS Radio.
And welcome back to The Price of Business on Talk 650, powered by CBS Radio. I'm your host for the day, Chris Kelso, filling in for Kevin Price. And in studio right now, I have a great friend and an incredible contributor, Shannon Register. I said Price, didn't I? Shannon Register with Register Real Estate Advisors. Shannon, how you doing?
I'm doing great. It's good to be here.
Always. You know, we're going to pick up, for all those listening, we're going to pick up what we talked about last week in another segment because you have a really special guest. But first, before we begin, let us know who you are and what you do, if you don't mind.
I'm Shannon Register, the broker and owner of Register Real Estate Advisors. We're located in Spring, but we do transactions all over Houston. We are the fastest growing real estate company in the Houston area right now.
Congratulations.
Thank you. We do a lot of marketing for our sellers, an incredible amount of social media and new technology that we're implementing with selling houses. It's working great.
Absolutely. And for all those listening, by the way, last week we had a great segment. You can go out to our website and you can research the top 20 things you need to consider when looking at a real estate company or searching for a broker, and they were all great. We're going to continue that on. But in the meantime, you have a very special guest we're going to talk to here.
I do. Dr. Jim Gaines is going to join us today from the Real Estate Research Center at Texas A&M University. He's a research economist that focuses on housing and land development issues, and he brought us some great insight last December, kind of projecting the new year. And so I wanted to have him back on now that first quarter's over and kind of see where we stand now going into summer, because we know summer's always a busy season for real estate.
I would definitely agree. Dr. Jim Gaines, are you on the line there with us?
I am here. Good morning.
Good morning. How are you doing?
Doing just fine, thank you.
Hopefully you had a really good Memorial Day weekend.
We sure did.
Well, we really appreciate you being on board today on The Price of Business. And, and Shannon was talking about this. I think you had some really good information back in December we talked about. And, how's the market looking right now?
It's been very slow. Of course, what we're talking about here is the overall market, particularly at the national level, has been slow. The foreclosure issues still have not been resolved, but it's been very slow. Now, if we get more locally, though, if we get into Texas and get down to Houston, things have been a little bit better. We didn't fall as far as the rest of the country. The foreclosure issue appears to be easing up in Texas and in Houston. So we don't have a big supply overhang. Probably the number one issue right now in the marketplace is the lack of confidence on the part of many buyers about where the market is and where it's going and how soon it's going to get there.
Oh, I would definitely agree. And, one of the things you mentioned right there, consumer confidence, obviously on a national scale, has improved a lot, but it's still at a very low factor considered where it was, 5 and 6 years ago. However, with rates moving down, as I tell everybody, I want to get your opinion on this, is now a good time to be in the market to look for a home?
I can't tell you how many times we've gotten that question. And yes, the general answer is it's a great time to be in the market if you're a buyer, with a couple of provisos. Number one, you're going to have to be able to qualify for the mortgage. So a lot of people who would like to be in the market and would like to be buying, they're discovering that the tightening of the credit, the higher requirements of FICO scores, higher down payment requirements, and so forth, is making it a little tougher. So number one, you've got to be able to qualify for the loan. Number two, you better have the attitude that if you are in the market today to buy, you're probably going to need to hold the property for some time before you're going to see much in the way of capital appreciation. You have to remember that during the housing boom that we had 5-6 years ago, the big impetus for buying a home then or across the country was the wealth effect or the investment value of the home. And right now, that's not the primary focus. The primary focus is buying a home of where you want to live, where you want to raise your family, and a place you want to be for at least the next 3, 4, 5, 6 years or more.
Absolutely.
And with those two provisos, it's a great time. It is, in general, a buyer's market. There is a fair supply of properties being offered, relatively few buyers, and therefore that means buyers can negotiate a little stronger. Interest rates, as you pointed out there in your question, remain at historical lows. Everyone I talk to is still amazed that you can buy a home now for under 5% interest, and at one point even under 4%, depending on where you were.
Correct.
So yes, it's an excellent time, and of course prices are down. So it's a great time, but you better be able to answer those first two issues first. If you're in a job situation, for example, where you know you're going to be transferred, in a matter of a year, 2 years, 3 years, buying might become problematical there because you know you're just not going to be there long enough unless you've got some help from your company.
Right. No, I would definitely agree. The good thing is you're talking to a realtor and a mortgage guy here, so we can all relate and back you up in regards to that. And one of the things you did mention is unless you get a really good deal, especially on the reloads, however, the reloads also have a lot of benefits associated with buying and selling because of what their companies do. But you are right. I think people are in the market nowadays not necessarily as an investment and as that wealth builder, more importantly as a place you want to live and grow and build a family in the future.
Yeah, and let me also say that is exactly true for the owner-occupant, the household with a family or simply wants to live there. It's ironic because we now have a sort of bimodal market because there are a number of people buying houses as pure investments. As you know, and I'm sure you've been telling your audience, one of the things that's been clearing the market in the foreclosures and some of the distress sales are investors who are buying homes and converting them into rental properties.
Absolutely.
So we've got both ends of the spectrum, and I didn't mean to imply that investment potential of buying a home is not there. It is, but now it is a pure investment, and the decision making, the pricing, the financing. All of the aspects of the transaction are now more those for that part of the market is as an investment, not as a place to live.
We're seeing a lot of activity in the market right now. Obviously, we always do as we head into summer. A lot of buyers out there start looking once school gets out. What do you predict for the fall and winter months as we look into the future? Do you think that that the buyer confidence is going to continue to stabilize, or do you see a drop? Do you see that we will drop back down, do you think, in the spring and fall of next year or of this year, later this year?
I think, Shannon, that we may, and this is true for Houston, for all of Texas, and maybe even across the country. So I'm going to give a 1,000-foot view here answer. We may see this fall and winter not be as strong as we'd like, because I'm not sure that confidence factor is going to come back quick enough. And one of my reasons for thinking that is right now the part of the economy that's having trouble with jobs and literally are losing jobs is the public sector.
Right.
And in the public sector, you have a lot of school teachers, you have public employees, state employees, city, county employees, so on. And a lot of that isn't going to hit until this fall. For example, the school teachers, they may have already gotten their notices they're going to be laid off, school districts across the state, across the country, but they don't actually get laid off until September.
Right.
Yeah.
And so I think we're going to not see that confidence come back. Now, it's ironic I'm saying that because the private sector, on the other hand, is adding jobs. And in fact, that's the good news. It's offsetting some of those public sector job losses. So it's going to be a mixed bag. I don't think that we are going to see any kind of significant improvement, and I'm not even sure how to define improvement, but significant improvement until the next spring.
Okay, so 2012 is going to be a great year for real estate.
Well, I think 2012 is going to be that first year of real recovery. Mm-hmm. Now, I have to admit that so far, 2011 has fooled me. Right. I thought it wasn't going to be quite as good as it is.
Yeah.
And I would agree with you. In fact, one of the things I was reading the other day is the statistics in regards to a lot of areas are actually flat this year. And I would argue with a lot of people, flat is better than the negative we were in for the past couple of years.
Exactly so. I was talking to a commercial broker not long ago who said flat is the new up.
So for investors, would you tell investors we've have hit the bottom and we're returning, or still wait and see what happens?
Well, I think for sure that it's probably a reasonable proposition that we've reached a bottom or a trough, if you will. Mm-hmm. Now, the real question is, are we going to rock along that trough or that bottom with just little blips up and down along, or are we going to start seeing some real, and I don't mean real in inflation adjusted, but just significant improvement to the point we can say, okay, now we are actually getting better.
Right.
And I think our rate of improvement and getting better, we have to be careful. People may be expecting a sharp rebound and getting back to something that looks like the 2003, 4, 5 period very quickly, and I think it may take us a year or two to get there.
I would definitely agree.
Maybe even be 2 or 3 years.
I would definitely agree. And, and that was sort of an anomaly, as we talked about. In fact, a lot of the builders out there always say at their numbers, you really have to take out some of those anomalies that we had in the building sector right there, due to the fact that if you go back to the trending from 2000, 2001, 2002, till to date, and take out those 4 or 5 year period, we're back on a good trending scale.
Exactly so. In fact, I've done that analysis, and there is a good deal to be said for that. I can tell you, for example, Houston and Texas, our employment recovery has almost come back to where we were prior to the bust.
Dr. Gaines, we're going to be running out of time in this segment. We could speak with you forever, trust me. Thank you very much for being on board today. That is Dr. Jim Gaines. He is with the Real Estate Research Center with Texas A&M University. We appreciate you being on board.
My pleasure.
Shannon, how can we reach you again?
You can always find me online at rrea.com and see all of our videos at rrea.tv. And you can always call the office at 281-288-3500.
That is Shannon Register, a great guest of the show, great friend. We're going to take a break on this segment. You are listening to The Price of Business on Talk 650, powered by CBS Radio. We'll be right back.